Welcome to today's webinar. Today, our focus is on nature, and we'll be talking about integrating nature risks, impacts, and the TNFD into investment decisions. My name is Ruby. I work on the projects team here at Iceberg Data Lab, and I'm joined by our CEO, Matthieu Maurin, who, as you can imagine, is an expert in all things nature investing. For those of you who don't know Iceberg Data Lab, we're a leading provider of biodiversity and climate data to financial institutions. We are French, but as you can tell, I'm definitely not French. We're a very global company, and we work with a number of global financial institutions to help them measure and manage the environmental impacts of their investments. During today's webinar, if you have any questions, feel free to pop them in the Q&A box, and we'll get to them as we go through. And we'll have a few polls as well. So if you could please put your responses into that would be great. All right, let's jump in. So why now? Why focus on nature investing now? So there's an obvious environmental case here, but for investors, the key point is that economies and portfolios do depend on nature and ecosystem services. And nature loss is now translating into measurable risk for companies and also for investors as well. So in a recent research paper done by Binghamton University, researchers at Binghamton University, using our Corporate Biodiversity Footprint, they did find evidence that biodiversity is being priced in bond markets with 55% higher underwriting fees for higher biodiversity firms. Regulation is also hardening in a few jurisdictions like the EU and France in particular. And investors do now need measurable metrics for risk management, for screening, and for reporting as well. So if we dive into the EU, we've got two key rules here that shape how investors report on nature. We've got the SFDR and the EU taxonomy. So the SFDR essentially sets the rules on what investors must disclose and how sustainable their products are, while the EU taxonomy is more like a rule book or the definitions that define what economic activities count as environmentally sustainable. So under the SFDR, larger firms in the EU must publish a principal adverse impacts or PAI statement that covers both entity and product level indicators. So on nature, this includes a number of PAIs. You can see that there's PAI 7, 8, and 9, which covers exposure to activities harming biodiversity sensitive areas, emissions to water, and hazardous and radioactive waste. And there's also some optional indicators as well. Biodiversity themed Article 8 or 9 funds should use these PAIs as a way of demonstrating how their fund meets sustainable objectives. And Article 9 funds in particular must report against a core set of PAIs. The EU taxonomy, it sets out detailed criteria for which activities really count as sustainable. This is across 6 objectives, and 3 of those objectives are to do with nature. So that's water, pollution, and the protection and restoration of biodiversity and ecosystems. So investors can then measure what share of their company's revenues, their CapEx and OpEx is eligible. So that's defined as a taxonomy activity. This may be projects, for example, that finance nature conservation or improve water supply. And they must also report what share is aligned. So this goes beyond eligibility and it looks at meeting substantial contribution thresholds, plus do no significant harm and minimum safeguards as well. So even a fund with a climate objective under the EU taxonomy is expected to screen for significant harm to biodiversity and water and to disclose that. Looking ahead, the 2026 reporting cycle will bring expanded taxonomy alignment across all environmental objectives. So currently, it's just the first 2, the climate-related ones. And the SFDR 2.0 is expected to streamline disclosures and fund labeling and to better integrate nature and biodiversity as well. So moving on to a more global view, we've got 2 key ones here. We've got the TNFD, so Task Force on Nature-Related Financial Disclosures, and the ISSB, so the Global Standard Setter. The TNFD provides a voluntary set of guidelines for embedding nature-related impacts and risks into financial disclosures. The structure mirrors that of the TCFD, if you're familiar with the TCFD, and also ISSB IFRS standards. And it covers recommendations across 4 key pillars. So the first one being governance. So we're looking at how nature-related dependencies and risks are being addressed at a governance level. The next is strategy. So what are these nature-related dependencies and risks, and what are their impacts on company strategy? Thirdly, we have risk management. So how are these nature-related dependencies and risks being identified, managed, and integrated into company risk management? And finally, the most important one that underpins the other 3 pillars is metrics and targets. So what metrics are you using to track this? How are you measuring your risk? How are you measuring impacts? And what is your organization's actual performance in related to nature-related issues? And have you set targets? So within this, we start to see some clear metrics and approaches for nature-related disclosures that start to emerge. So although nature is a bit more complex than climate in the fact that we don't have a single metric to measure impact, like tons of CO2 emitted, the TNFD does set out some really clear ways of measuring impact, including land and freshwater use, for example, pollution, resource use. We'll get into that a bit more when Matthieu dives into our corporate biodiversity footprint. So we are seeing some tangible ways to measure nature impact emerging. The IFRS, so that's the International Financial Reporting Standard, S1, it pulls nature risk into the mainstream for financial institutions. It's essentially saying that if nature-related risks are financially material, companies must disclose according to those 4 pillars again. So governance, strategy, risk management, and metrics and targets, using the TNFD as well. So what we're seeing here is that the ISSB and TNFD are very aligned. The TNFD is currently releasing, or they'll continue to release technical guidance, but they'll pause to let the ISSB build nature into its own work plan. What we saw earlier this year is that although there won't be an IFRS S3, so a separate standard on nature, the ISSB will release a practice statement, and this will provide guidance on how to disclose nature-related impacts and risks. And then it would be on jurisdictions to then embed these standards in their own regulations, as has been done with climate-related IFRS S2. So we're seeing a strong foundation for nature-related disclosures emerge globally via these 2 frameworks. So now that we've had a look at the why, let's dive into the how. So I'll hand over to Matthieu to take you through this.
Thank you, Ruby. Hello, everyone. It's a pleasure to have the opportunity to present to you today how we do approach integration of nature into decision-making process. So we'll focus on investment on that slide, but we could have presented the same process for integration into credit with credit committee instead of investment committee. But basically, the toolbox that we provide through the set of data solutions that we will present you today aims at, first of all, being a capacity to screen a universe and identify, regardless of what is the agenda of a fund, nature, sustainable, generalist, and so on, risk-driven, performance-driven, and so on, to be capable to have a nature angle and a nature screening. That's the name of our solution, to spot which constituent may raise an issue, and at minimum, the portfolio manager, the risk manager should be aware of its exposure from nature risk from a nature standpoint. Then managing the fund itself using scores, metrics, intensities, and then leveraging on that and leveraging to the extent of the granularity provided by the signal to understand the main driver of impact, the main source of risk, and then run a stewardship engagement strategy and be in a capacity to provide the compulsory reporting asked by the regulator, as mentioned Ruby, or the reporting asked by asset owners and your own clients, for instance. So the toolbox that we developed is named the Corporate Biodiversity Footprint, and it's a 3-layered solution with very basic screening, with scores which aim at providing a ranking within sectors of companies from 1 to 6 scores, sectors by sector, to have a very simple ranking if you don't want to go beyond that. And then have a footprinting solution, which is to nature what carbon footprinting is to climate. But we start at a very granular level, which is at the level of what the company do purchase or sell in terms of product or services. And from that, build and appraise their environmental impact, leveraging on life cycle analysis, and therefore having a very bottom-up science-based calculation, which provide a very transparent result, enabling to identify the main driver of the contribution to biodiversity impact. It's important to have a comprehensive view, scope-wise, because like for climate, as you can see on this graph, depending on the sector, the main driver of a biodiversity footprinting can be upstream. That's the case for consumer staples and notably for the food sector, for instance. Downstream, or the direct impact for the metals and mining sector, important weight, or downstream, obviously for the financial sector, because it's the footprinting of the loan book or portfolio asset portfolio. Same comment for the pressures. We do cover and we model all the 5 pressures listed by IPBES, which is to biodiversity, what IPCC is to climate, to fully understand which are the main driver of the risk, which, as you see, are sector specific, and maybe the land use impact and the change of land use, GHG emission, pollution of water, air, soil, invasive alien species, especially in the shipping sector, or the overconsumption of resources. That's the global overview of the results. But now let's have a look at the how in a very concrete manner, showing how you may tomorrow basically use that toolbox to do your job as portfolio manager. So I am now sharing my screen, and you see the data console, which is a client platform used by our client, accessible to all our clients, with the tabs showing all the companies. But we will focus today on portfolio and simulate what happens if I am a portfolio manager and basically I want to appraise the impact of nature that a portfolio of 100 lines may have, which is a diversified portfolio from a sectoral standpoint, may have from a biodiversity standpoint. So we have several identifiers which can be selected. We have to identify the name of the company, amount of relative share, that portfolio its amount, and here we can map it along several nomenclature. We are using here a nomenclature named NAS Plus because it is an open source nomenclature which is equivalent to NACE level 1. So it is matching all the ISIN with our database. In terms of coverage, we cover 10,000 issuers of both equity or fixed income instruments and above 100 govies. We can also map them, as you can see here, alongside LEI, another open source identifier. And of course, we have our own proprietary UID code. So while it is doing that import process, maybe one word about the different pressures that we cover. So I mentioned the 5 listed by IPBES. And basically, I did a parallel with carbon footprinting. When carbon footprint is a flat, biodiversity footprint is a building. And basically, we are adding up all the environmental impact that are triggered due to the environmental impact, which means generation of pollution or overconsumption of resources of all the products and services that the company is selling or purchasing, which means that we map systematically the supply chain and the downstream impact of product, which means that we have a systematic, and that's how we have a systematic coverage of scope 3 and a consistency across sectors, because every sector is either the daughter or the mother of another sector, which avoids having an inconsistent signal from the operation of a forest, for instance, downstream impact, and to operate a biomass fired power plant with its upstream impact, which will depend on collecting and harvesting of biomass. I said 5 main pressures, and in terms of absolute contribution, the most important one, as stressed by IPBES, is change of land use. The fastest growing one, unsurprisingly, is the contribution to climate change. And then we have pollution of air, water, and atmosphere. Overconsumption of resources, where we focus on the most important one, according to the literature, which is the overconsumption of water in water-stressed areas. And last but not least, invasive species, which we've modeled to reflect its weight in the overall contribution to biodiversity loss as stressed by PBS, and with the main contributor sectors being, as I said, transportation and shipping sector. So the charm of the direct you see here is that it seems that my Wi-Fi is especially slow today. So I will jump directly to the result of that sample that I imported earlier and that you can see here. So here what we do provide are, so we calculate all the metrics of which temperature metrics, absolute footprint, absolute carbon footprint, absolute biodiversity footprint expressed in square kilometer MSA. So that metric, we did not invent it here. It was put in the public domain by PBL, the Dutch Environmental Agency, and it's especially fit to appraise a diversified portfolio of product, which is in essence what a company is, and therefore extrapolating it at portfolio level to look at the impact of a portfolio. As I said, several use cases are possible. The first one and the simplest one is to screen the constituent. So we have the usual PAB and sensitive sector screening. And as you see here, we identify the number of constituents in that portfolio, 100 constituents, that operate at least one asset close to one sensitive areas. And it is disaggregated here between protected areas, areas in water stress, and the other sensitive issues, which are deforestation, 15 line, production of pesticide, production of plastic. It's a high-level result. You can view in the overall analysis of the portfolio. Here, you can identify which line are indeed the line that are impacting the most and the most negatively surrounding areas. So if I click on the first one, which is a Spanish utility, you can look at the asset tab this time and see that it operates 54 assets close to sensitive areas. most of them being hydropower plant, oil gas fire power plant, solar, and so on. And then you can select and identify which among those assets may be the one about which maybe you will want to get more information from the company to identify exactly what are the ways the company is managing its impact, distinguish impacts alongside the radius, and distinguish it alongside sensitive areas, which may be endangered species, water stress, protected areas, and so on and so forth. With the data visualization, I have to stress that we built that database from 10 million source database, which demanded months of data quality control, because there are many issues, let's say, in publicly available data when it comes to asset location. Now, for the biodiversity tab, it also identifies which sectors contribute the most in terms of sectors, consumer staples, material, in terms of pressure, land use, and then you have exactly the same information, which is being provided here in the overall analysis section. Last, I would say basic use beyond identify which are the most exposed constituent and rank them alongside their intensity that you have here, or alongside their scores, is to produce a reporting. If you have limited resource, but you want, for instance, to be in a capacity to provide to an LP or an asset owner portfolio reporting, we have templates that are specific to regulation, like the French LEC 29 or the UK SDR, and then you may generate a portfolio which arrive automatically in your mailbox. Since I am a bit slow in terms of calculation and Wi-Fi today, I will show you the end results, which is produced in generally 3 minutes. And so you see here that portfolio with all the thematic, that's the generic portfolio, but especially a tab on biodiversity. I won't spend too much time on it, but it compares the performance of the portfolio versus the benchmark, and it identifies sector by sector if the overperformance is due to the stock selection or the over or under allocation of the sector. And at the very end, you have a tab providing you all the regulated KPI. In that example, you have the PAI and, as Ruby mentioned, the TNFD indicator listed alongside their nomenclature. So to come back to the presentation, to finish the demo, some few words about Iceberg Data Lab. In terms of coverage, and our coverage is systematic, it do covers biodiversity, but also climate, regulated indicator, taxonomy, and so on and so forth. Climate, on both issuers of equity and fixed income instruments, govies too, and the underlying granularity of our model, which is important because your signal will be as good as the architecture of your model reflects the economical reality. As you see, it's not sector-based, product and services-based. And so we reach 2,300 different products and services. So why many clients are interested in that kind of solution? Well, first, you see that we developed an end-to-end automation of the production of regulatory reporting, which we estimate generally can save up to 0.5 FT by year, depending, of course, on the level of intensity of the reporting that you have and the different jurisdictions that you cover. But the reporting burden may be a significant factor cost-wise, and our data solution may provide a solution to address that and focus your time and resources on adding value to the portfolio management. We also provide optionality in the product and services that we provide, because we observe generally that at a very large client use only 10% of the ESG data package that they purchase. With Iceberg Data Lab, you can only purchase one indicator, the CBF score, if you only want one indicator, for instance. And on the P side of the P&L, if I may say so, first, as Ruby mentioned, well, we are the leading provider of biodiversity data, very recognized by prominent asset owners across the world, and working with leading academics, which values the fact that we provide a science-based granular approach and very transparent signal, because you have only seen a data visualization tool today, but we have an API which provides all the same metrics, very disaggregated by pressure and by scope, and with a data quality indicator, data point by data point. We also have now several research papers that were published, which stress the fact that markets are pricing impacts on biodiversity in terms of risk premium, which means that regardless of the question of the impact, if you consider that data point as an alternative data, it is evidence now on the market that it is a driver of risk and therefore of value creation, and should be in the toolbox of every portfolio manager, basically, or risk manager. We may guess that with the increase of the regulatory pressure and underlying ecosystem services availability risk, as for climate, that kind of correlation will only increase over time, and therefore that all money manager should integrate nature into their day-to-day work. Ruby, I will let you the word at the end, as we say. It's a final word.
Thanks, Matthieu. Thank you, everyone, for joining. If you have any questions at all, we've got our contact number there. We've also got our email address, and you can also visit our website to ask any questions. We hope you found it useful. Thank you, everyone, for joining, and have a lovely rest of your day.